You're listening to the Identity at the Center podcast. This is the show that talks about identity and access management and making sure you know who has access to what. Let's get started. Welcome to the Identity at the Center podcast. I'm Jeff, and that's Jim. Hey, Jim.
Hey, Jeff, how are you?
Oh, not so bad. Yourself?
Good. I think today is it's going to be a recurring theme around, fraud and what can happen with identity fraud and lack of loss of privacy, things like that. I was looking at a couple articles I wanted to highlight. One was, the IRS ending the use of facial recognition technology.
So
The
far.
reason that yeah, exactly. But the reason that they made this change as quickly as they did was, there were so many people using identity theft to file tax returns on people's behalf and kind of steal their tax return. And so the situation would be you'd go in to file your tax return and somebody already filed your tax return on your behalf. And so the IRS wanted to get ahead of that, hired a private company called ID.me to use a facial recognition. Obviously, there were a lot of privacy concerns brought up with that. And rather than getting into all the details, I thought one quote was really interesting, which is the transition may take time. In other words, the replacement. The administration recognized that privacy and security are not mutually exclusive. But I kind of feel like there is definitely some mutual exclusivity to them. I mean, there's a trade off between safety and privacy. I think that's one of the things that we have to be aware of, or that we ought to recognize. What do you think?
Well, I'm glad they recognized it. It seems to me it's a little late in the game to be recognizing this. This is something that probably should have been thought about way ahead of essentially going into tax season in the US. I don't know if it was going to happen for this year or not. So maybe it's not so bad, but I don't know. I mean, I think it's obviously a problem, right? Identity proofing, identity verification, the fraud that goes along with it is a legitimate concern and an issue. I think the concern that came out of this specific use case was more around the vendor itself and claims that they were making on how the technology performed the facial matching and indicating that it was not checking it against any government databases. And that turned out to not be true, that it was actually checking against government databases. So, I guess honesty maybe is supposed to be the best policy here. But that obviously caused a little bit of a conversation, let's call it, amongst people. And they've decided to, I guess, pause it or not do it or whatever it is. I haven't stayed up with it in the last week or so, but I guess we'll see what happens.
Yeah, no, and I think this will be a good live stream topic for one of our upcoming streams. So the other article that I saw was related to PayPal, kind of coming out that 4.5 million accounts were set up fraudulently to kind of game the system on a bonus that they were paying to, get new accounts created. And I don't think that there's any big knock on PayPal. Obviously, it's painful for them, right? But I think this is anytime that you incentivize people to create a new account or a new identity and put something of value behind it, someone's going to try to game that system, create false identities, and to the extent possible, automate that process. And it really kind of comes back to, having the tools in place to detect that fraud. I think the punchline in the article, and we'll post the links to these articles in the show notes, was that it's not that the fintech industry isn't making investments to prevent the fraud. They are at a level that they, that's, the greatest level they ever have. It's that the fraudsters are getting better. They're getting better. And this is, the more value that's out there, the more resources they throw at trying to steal. So that's essentially what that article is all about. I wonder what your thoughts are.
Well, if you have something of value that you're giving away based on the establishment of an identity, people will find a way to steal it. I mean, I'm a gamer. I've talked about my World of Warcraft days as I used to play. I haven't played as much recently, but one of the things that even in the gaming industry is people will set up accounts and then they will basically scam and sell gold, which is generally against the terms of service, because how they're getting that gold is by stealing the uh, you know gold that is associated with another customer's account, and it changes hands and it's gone. So if it's of value, people will steal it or try to. And if you are setting up your promotion in a way where you're opening yourself up where there is no identity verification, identity proofing, and you basically just require an email address, you got to prepare to take that on, because it's going to happen. Like, it doesn't matter what it is. It could be the most useless thing in the world. People will still find a way to covet and take it. That's my thought on that.
You're right on. So we have a guest today who's kind of an expert in the area of financial services, identity and access management, digital identity. And I think these are kind of good backdrop stories to what we're going to talk about today.
Yeah, let's talk customer identity. And you mentioned our guest. His name is Upendra Mardikar. He is the Chief Security Officer at Snap Finance. Welcome to the show, Upendra.
Thank you so much for having me, Jeff and Jim. Really appreciate it.
Well, thank you for taking the time with us. We're going to cover quite a few different topics, all kind of revolving around the customer identity space. But this is your first time with us, and we have tradition around here where we like to kind of find out the background, right, of the individual. It helps, I think, lend what the perspective is that you're coming at it from. You've got a long history in the space. I don't mean to age you, but you've been in the space for a while, and you have a lot of impressive companies that you've worked for. I'll let you kind of talk about that in a second. But how did you get into this exciting world of information security / identity? Is it something that you chose, or did it choose you?
I think it was more of a latter, and so where the industry actually chose me. What happened was by pedigree, I'm a technologist. So I, used to write code like most of the engineers, there are. So while I was writing code, I ended up into writing crypto algorithms and hardware security modules and security software just as an engineer. And because of my love for mathematics, I just happened to, engage myself into crypto. The framework Jim and Jeff I look at is that in security world there are like four types of security professionals that you will see. One kind is they come from the legal background or compliance background, right? So that I will say is one category. The second category of security professionals, they actually come from operations background, like they have been maintaining network firewalls and system administrators, and then they went and transitioned themselves into security. The third category is where I will put myself is more like engineering and science people, mainly from the software development background, and that's how I grew. And then the fourth one nowadays, there are more cybersecurity courses, so people are actually taking those courses. Even though I have CISSP, ISSAP, and other kind of certifications, but those were more add-ons than just taking some engineering or a specialized degree, if you will. So in general, I fall into the category 3, which is more like an engineering and science pedigree.
And you've got some impressive companies you've worked for, things like American Express, Visa, PayPal, and now you're with Snap Finance as well. I guess, can you take us just real quickly kind of through your journey of what were some of the highlights of kind of your path to where you are today?
Yeah, so I was very fortunate to work for these companies. During my tenure at PayPal, which was an 8-year journey, I was, about kind of employee number 500 for PayPal when it was part of eBay, if you will. And then I grew with the company, and I left it when it was about 15,000 people. So I grew with the company, and as I started focusing more and more on security side of the equation over there in PayPal, the customer identity, which is more like authentication when somebody logs in into www.paypal.com or uses mobile phone to come into PayPal. I was very fortunate to work with a great, very smart people over there to work on those initiatives. And one of the most prominent initiatives was login with PayPal. So I was fortunate to work on that. After that, I also was lucky to work on Google Pay and Apple Pay, which, if you go back to 2013, the credit cards and any payment instrument, they were not on your phone. They were plastics sitting in your wallet. So how would we take those plastic form factor, if you will, and do the over the air provisioning on your mobile devices, all right? And what are the threat vectors, and how do you make sure that looking at the threat modeling of those over there provisioning and all the payment and the whole ecosystem. Again, worked with very, very smart folks all around the company, as well as from Google, as well as from Apple. And then went to American Express, where I ran security strategy, security architecture, security engineering organizations, along with their application security. And then I started, helping with customer identity. For example, when you log into www.americanexpress.com, I supported that entire organization.
I was looking over your profile here on LinkedIn as kind of preparation for this conversation, and one thing that struck out, at least to me, was uh, patents. You've got a lot of patents to your name. What is your favorite patent?
Yeah, so there are lots of patents I don't remember, and it was all because of trying to balance the security and usability side of the equation, which I hope to touch later on during our conversation. um, the patents that actually made impact to the world, one of the things was, and this was before auth, before OAuth, we came up with some three token API at PayPal. So this particular technology helped solve some of the DDoS activities that happened, and it was primarily because of the impact it created for PayPal. And when there were some DDoS activities, lots of financial institutions unfortunately were affected during that. I think it was like 2010, 2011. I don't remember around that time. But because of this technology that PayPal implemented, that we were not affected because of that DDoS. So that was one of my favorites.
So, Pendra, you've been in Silicon Valley for a long time. I hope you bought real estate early on in your tenure there in Silicon Valley, because I know even back in the late '90s, it was already getting astronomically expensive. But so hopefully you did that. I was just wondering, Snap Finance. What does Snap Finance do? Just so people have a little bit of background on the type of business you engage in.
Absolutely. So Snap Finance, is a fintech, digital first fintech. What we do is, there are, it's in the BNPL space. It's a, buy now, pay later, lease to own, and lending platform. So for those of us who are on the call, not everybody is privileged to have a financing right off the bat, right? I mean, if you go to companies like Affirm, if you go to companies like American Express or PayPal, they have their credit, PayPal credit and buy now, pay later kind of offerings. Not everybody is fortunate enough to go get the loans and the leases, or they can buy the products. What happens, Jeff and Jem, is when the customer goes at these stores, they may get declines for the loans, right? So we follow very humane kind of experience to these users, and it's not at all predatory. Where we offer these loans and buy now pay later products to the subprime and not so privileged, people. So that is what we do. So there is more rewarding and fulfilling, angle to it, along with it's a late stage startup, and a digital first fintech.
That's great. It's exciting to really believe in what you're doing. You teased a few topics there. Usability and security was one. That this whole transition from the physical card swiping all the way into the mobile device. I'm going to tease one as well. We're going to talk cryptocurrency and how that's changing the game a little bit at the end of the episode. But before we go there, I mean, you focus on customer digital identity in the payment industry. You kind of have a framework for how we should look at customer digital identity. And I wanted to give you an opportunity to kind of walk us through that framework.
Absolutely. So, Jim, if we think about what the customer digital identity in the fintech world means, or in financial services, or across the industry, let's try to understand what identity and trust essentially is, right? So, like for example, even during this particular podcast, right? I mean, you say that, hey, I'm Upendra, and you're listening to Upendra's voice. How do you know? That there is Upendra on the other side, and how do you know that Upendra worked for these companies and he is the same person who is claiming to be, right? So if we think about it from a 50,000 feet level, there is this nebulous identity in ether called Upendra, called Jeff, called Jem. And then Upendra is trying to latch on to Upendra's identity, claiming that this is Upendra, who he is, who he claims to be. And then, same thing Jeff is trying to do, and same thing you, Jim, are trying to do, right? So typically what companies resort, right, in the digital world, you move that problem towards digital world and forget about the physical world. But most of the companies, they use these 5 stages, if you will, of identity. The first one is identity proofing. And what does identity proofing? It's a technical term, but lots of people use as know your customer, know your business, and we may see different flavors of it. Right. So what does that mean? That we take all the official documents, so your driver's license, your passport, your utility bill, and what that means is that you are Upendra because DMV says so, right? It's not because you are Upendra because you say so, but you are Upendra because DMV or passport office or utility bill says so, right? Somebody else is saying that you are Upendra. So there are a whole bouquet of options, Jim, in the part one, which is the identity proofing. The second part of the framework is identity authentication, right? I mean, like what you know, who you are, what you have. These are all factors of authentication, and there are other factors of authentication like location and your behavioral biometrics, right? I mean, I'll put that in the authentication bucket. The third one will be more like an authorization based on who you are and what kind of credentials you have given, what kind of permissions can I do, which is more like a birthright permissions is what entitlements, like people call, right? The fourth pillar is linkages. So what that means is that based on your connections, based on your social media behavior, like your LinkedIn profile, your Facebook, your Instagram profile, all that connection, all that linkages also add to your identity. And lastly is a reputation. What do you take of it? So Yelp reports, for example, or the eBay, so when I was part of that eBay Inc., their reputation was, is this a good seller or a bad seller, right? I mean, what is the rating of this restaurant in other contexts, right? So all that a reputation actually emerges out of identity. On all these 5 things actually make the customer digital identity. And based on that, we decide whether to trust or not, which is a slightly different angle.
Yeah, that's really interesting. And I think, in this podcast, we explore the first three: identity proofing, authentication, authorization all the time. But the linkages and reputation, you're doing a further deeper dive into that person's identity, completely valid. I'm just wondering also, maybe this is just how to think about the difference between linkages and reputation is, let's say we have something like a credit agency, a credit scoring agency like an Experian or TransUnion in the United States, where they're going to say Upendra has a credit score of XYZ. Um, where does that fit in? Is that linkages or is that reputation?
So the credit score is based on how what you have done so far. So that becomes more like a reputation. So there are multiple angles to reputation as well, Jim. Right. So one reputation is that if you are putting in, paying your bills all the time, on a consistent basis, right? These companies, the utility bills and other guys, whoever you are doing the bill pay, they are claiming that, yeah, this guy is, has been very timely on paying your bills, and that's where your credit score potentially goes up, right? There is also a social angle to it. For example, like restaurants, or you go to a hair salon, and so there, that kind of reputation is whether this guy is a 4-star or a 5-star is a slightly different angle, but that is all part of the reputation.
It's interesting. I spoke to somebody who was, as a landlord, has many properties. And what he told me was that the use of the credit score is probably the most reliable piece of reputational scoring that they have on whether or not the person is going to pay their bills on time and leave your house in one piece when they move out. Because if they have a good credit scores, because they at some level cared about it and built that reputation by paying their bills over time and not burning down your house on the way out. So just an interesting side angle. And one thing we try to do this podcast is not get, we both, you live in the United States, Jeff and I, you live in the United States, right? And we have a US centric view for sure. At the same time, this world of international finance goes well beyond the borders of the United States. And so, um, I know in your business and what you do, these international factors come into play. It must create a lot of complexity around things like identity proofing, for example, privacy requirements, other regulations, like you mentioned, the know your customer. There are, anti money laundering and know your customer regulations, and those got to have to really vary by international geography and by government. So I'm wondering, how does that all kind of fit into the mix? Just maybe just give us the flavor of how that impacts what you do.
Yeah, I mean, if see, we are in the United States and most of the developed countries, the identity ecosystem, even though we talked about ID.me, the identity ecosystem and the verification of identity, the identity proofing, these are evolving, but still, in a decently mature state, right? So we are fortunate to have. And different countries have different regulations, and all these very reputable businesses that I was privileged to work with, they take regulations very seriously. And even Snap Finance, we take a regulation very seriously. So we cater to all the banking regulations and country laws and country regulations. So what happens is that in the countries that are not, where the identity systems are not as mature, and these are typically developing countries and different parts of the continent, what happens is that we have to throw people, process, and technology at these problems, Jim. So what that means is, when If you can connect to a quote unquote centralized system and you can say that, go and verify this identity, if you cannot do it, in that situation, there are people actually who take these documents, so verifies these documents manually, and then we try to digitize that as much as possible so that they are onboarded, on a regular basis, on a, as fast as they can. But it's essentially the people, the processes, and lots of manual work that goes beyond, and talking to actual banks, so there are battery of people who do it. So that is how the KYC is done in those countries that don't have mature identity verification systems, or the products or the vendors that are there. Now, as far as you mentioned about the AML, I mean, just so that everybody is aware of what AML is, anti-money laundering, it has three phases at a very high level, right? So one is, money laundering means, people have some illicit money that they have gotten from illicit, channels, and they try to integrate into and make it legal. Right? I mean, that is the high level definition. I have illegal money. I just try to make it legal. So the way they do it is three steps: placement, layering, and integration. Right? I mean, this is what they do. Uh, Whenever there is a money that comes inside this ecosystem of our companies, what we try to do is we definitely check the source. We make sure that where it is coming from, and you really know, each and every penny, each and every dollar that is coming from a known source. And then, so that the layering and integration won't happen. So that is the AML angle. So KYC for international, if there are identity verification, then we obviously want to digitize it. Otherwise, it becomes very manual, and then we try to automate and digitize as much as possible. But there are limitations that we talked about.
I would imagine you spend an awful lot of time thinking about authentication as part of this role to try and at least stop there for me getting in the front door, right? I think we're talking about defense in depth and the different layers here from a identity perspective and just from a security perspective. Um, what are some examples that maybe you can give where that authentication needs to be that balance of security and usability? I certainly remember login with PayPal, right? I think at least for me, I'm thinking it's probably one of the first kind of like IDP things that I probably had some experience with of like, oh, what do you mean I can log in with like my PayPal account? I guess first of all, why would I want to? And then two, is it secure? I'm thinking of things like that, but maybe you've got other examples where you've had to strike that balance. And I'd be really curious to hear if there was something that you said, yeah, I'd love to do that, but we can't because it's just not usable enough. That's a bonus point. How about that?
So the best security and best authentication model is that customers are not entering anything. That gives us the best balance of usability and authentication. So what that means is that there is lots of transparent things, and I was not joking, like I said, Jeff, earlier when I was mentioning that, because there is lots of things that happen in the background to really know who you are when you try to go to this nebulous concept of identity in ether that we were talking about earlier. Right. And when Jeff tries to grab this identity of Jeff, that transition should be as seamless as possible. And that's where the best of the authentication technologies come in. Are we there yet? The answer is not. I was talking about the strong authentication and MFA with the framework of, what you know, what you have, and who you are. People are doing some work in biometrics, the way you are using behavioral biometrics, your face ID, touch ID, and having these multiple signals over there. What is happening is that with that, when you say that, hey, let's send the transaction to your phone and let's have a facial ID while you are logging onto your browser on the desktop, it creates friction, even though that's the best technology that we have. So to answer your question, the balance of usability and security is the best security is and best authentication is there is no authentication. It's all happening transparently. But right now, because of all the attacks, You cannot just rely on the passwords. All the passwords are being compromised. So people are saying that, okay, what if you go with the MFA and then try to use the other factors and combine these together? So that is what is happening in the industry as we speak.
I would imagine things like FIDO and standardization when it comes to things like passwordless and the the improvements that we've seen, like WebAuthn and all the major browsers supporting it, has been helpful. What is the impact of something like a FIDO or a standard along those lines? Does it make I would imagine it makes life easier from an interoperability standpoint, but does it solve things that you were already solved before and need to switch? Or is it an answer to something that you couldn't really do before?
Yeah, I mean, Fido, WebAuthn, all these are like super awesome initiatives, and let me tell you why these are impactful. So if you go back to the centralized logins, right? I mean, and let's go all the way back to Passport, right? Microsoft Passport. So what was happening at that time, Jeff, was there was a centralized place where everybody will enter their username and password, and then there is a secure token service (STS) and whole 9 yards. I don't want to get into the technical details of that protocol, but what happens is that if you have all your credentials, if you have all your authentication at a centralized place, which makes sense, right? I mean, you're trying to organize all your identity into one space, one place. The problem is that it becomes a single point of failure and single point of attack, right? So having a centralized system, and there is always going to be a philosophical debate whether the social login sites that we have, SSO, is that a good idea, or should we have distributed identity where the passwords will be different from different properties, and then you tend to forget the password, right? I mean, how many times you have to reset your password? So, at a very practical level, what happens is that when you have a centralized, authenticator, if you will, at other server, it is going to be a point of attack. And if one single point of failure, and if one's centralized system gets attacked, all the credentials will get compromised. Now, contrast that with something like fast identity online, FIDO, right? So, what these guys do, and kudos to Michael Barrett, who was the former CISO of PayPal. He was one of the guys who partnered with multiple folks in the industry, and I was very fortunate to work in partnership with Michael. So, what happened over there, Jeff, was when he started thinking about this along with other industry thought leaders, he was saying that instead of having this authenticator like your face ID, touch ID, these are or the facial recognition, instead of taking your facial, let's talk about face, right? So instead of taking your nose and the eyes and the dimensions of your face, taking all the pixels and putting it on the centralized system, and that centralized system might get compromised, what if we bring it directly on the edge, so on the phone or on your computer, right? So with that, now what happens is that even if the centralized system gets attacked, nothing is lost. It's all local, it's all under users control. So that is all the FIDO thing is all about. The impact of FIDO, the impact of this web authentication is it makes our lives easier as service provider, as a cloud service provider, where the authentication is happening on the devices, on users computer, on customers computers, and then all we get is yay or nay,
Um, I want to make sure we talk about a couple of things because I don't want Jim to get mad that we don't leave time for cryptocurrency because he's crypto Jimmy around here. What I'd like to talk about next is this evolution of the actual payment process. Right. I think we all remember credit cards, and then the big chunk machine where it would take the carbon copy, and then it's the portable machine that you bring either to your table or whatever it looks like. And now we're seeing swipe and chip and tap to pay. And I'm more tech forward, so I try to be on the cutting edge of things. So I'm like a big fan of Apple Pay, Google Pay, all the wireless stuff, right? I think the promise of carrying just my phone and having all my digital identities as well as my digital payments, and it's accepted everywhere that I want to go, which is the big part of it, is a huge win, at least for me in my pockets. But maybe you can kind of talk about maybe that a little bit of that, how that evolution is occurring, because I think there's another one that's coming through that I'm not as familiar with. That's called chip to cloud, and maybe you can kind of touch on that as well.
Yeah. So what is happening, Jeff? And again, maybe there is a brief history of security and credit card security time, right? I mean, we can talk about that. So you're absolutely right. So earlier, as you know, those machines, they were called knuckle busters, right? I mean, because they used to bust your knuckles. The obvious issue with that was there were lots of credit cards that were fraudulent, and so that was very obvious. Then they started putting the magnetic stripe right at the back of the card. On the magnetic stripe, all they were doing was encoding the card number to begin with. And one of the problems is that over there is that the card number can still be read from the magnetic stripe reader. And when the card number was read, people were just counterfeiting card numbers and counterfeiting the magnetic stripe. So they added something called CVV. And this CVV is different from CVV2, which you see on the card, which I'll talk about. But just on the card itself, if you look at the back of the card, there are track 1, track 2, and track 3, optionally track 3. But most of the information is in track 2. And on track 2, what happens is that there is something called CVV, just to make sure that there is an integrity over there. Now, what people started doing was they started copying the entire magnetic stripe, create a counterfeit card, and then use that. At that time, CVV2 was born, which was a 3-digit or a 4-digit SID, also in American Express's world. It comes on the top. What that is, that means that you are actually in possession of the card. So that was different from the CVV that goes on the magnetic stripe, and then the CVV2 goes on the front. Now, as there were more and more cards that were being created with this, people started getting the magnetic stripe and CVV2 fraud, and that's when the chip actually came in. So on the chip, which is nothing but a small Java card, they have a certificate which is not an X509 certificate. And when you go ahead and insert that particular chip, or you tap that particular chip, just like an Apple phone or Google phone, Google Wallet, what happens is there is an underlying protocol, and there is yet another key that goes inside, and there is underlying protocol that makes sure that your transaction is secure end to end. So that is the whole idea. EMVCO has done lots of great work over there. There are ISO standards, 15408, if I remember correctly. Don't quote me on that, but there are those kinds of EMV standards that actually solve this problem and whole protocol. So that is the evolution, if you will, of how the payment industry. The chip to cloud is more of a construct, right? In the sense that what goes on the chip versus what goes on the cloud. So, there is a concept of secure element on the phone, and that secure element can either be a virtual or it can be a actual secure element, a hardware secure element with FIPS 140-2 compliant chip that goes over there. The long story short is, in this continuum, what goes on the cloud and what goes on the chip, so that we know that when you are making a payment at, let's say, any retail store, buying that can of milk and paying with your credit card or paying with your Google Wallet or Apple Wallet, that transaction is secure.
So, Jeff, thank you for saving a little time for me to discuss cryptocurrency. And Upendra, you've been really fantastic in terms of kind of giving a industry view. And really, I think we're more or less asking you to suppose here, right? Because when we talk about crypto, it's a lot about where are things going, and none of that history is yet to be written. But actually, specifically, even to start the conversation, I think what I'd like to understand is, how's cryptocurrency being seen by companies implementing payment systems? So thinking less about cryptocurrency like, if I buy a Bitcoin today, it'll be worth more in the future. in other words, like almost like an equity or like an investment. I'm less concerned about that for this conversation than I am about cryptocurrency as a form of payment, being able to go in and buy a loaf of bread with your Bitcoin. And I'm wondering, do you see that now? Or how much of it is there now? And where do you see it going in the future? Is it going to come quickly? And again, kind of breaking that mold of not just in the US, but what do you know of that's happening internationally?
Yeah, yeah. No, I will. Typically during these conversations, I say that hey, my thoughts don't reflect the thought of my any employer, both previous as well as current employer. So I will be talking more as my personal thoughts. So what is happening in my mind, Jim, is if we look at the crypto, and I'll talk about where it might go, but if we talk about crypto as to how it evolved, right? I mean, it was primarily because of the 2008 thing when quote unquote Satoshi Nakamoto. Again, talking about identity, we don't know what the identity of Satoshi Nakamoto is, whether it is he, she, or whether it's a consortium. That's how it all started, where where the entire DeFi, decentralized financing and the currency essentially evolved over there. In my mind, it has picked up so much steam right now that it is more like the people call about Web 3.0 nowadays, and I see it is at that particular cusp, and it will play one of the key roles in the upcoming Web 3.0 wave. So that is where my thinking is now. How the companies, the financial institutions are looking at as more and more regulations come in, and regulators are looking at with a very nice angle over here. As more and more regulation come in, this will become more part of the bits, the mainstream. And countries like El Salvador, they are offering right now. So internationally, when you ask me a question as to internationally, people are using Bitcoin to basically buy a cup of coffee. For example, you can go to El Salvador and buy a cup of coffee today using your Bitcoin. Where it will go, of course, I don't have a crystal ball, but I think it is here to stay. It is going to be part of the mainstream as more and more regulation comes in, as the CBDC, the crypto-based digital currency, comes into the mainstream. People will be applying, the taxes and all those kinds of things are being already, incorporated right now. So it is here to stay, in my opinion.
Yeah, it's interesting. I mean, in terms of, I think there's so many issues that you brought up there. One is I think governments may fear crypto because of the ability to control it. We know that the Federal Reserve System in the United States can control the money supply, as well as the dictating the lending rates, borrowing rates. So they have a way to kind of stabilize the value of that currency. So imagine if you went and bought that cup of coffee today and it was $5, and you show up the next day, you don't know how much it's going to be. It could be $10. That's not really what you want out of a currency that you have to live from, right? So there's that challenge. I think overall, though, I wanted to, since we're in this supposing range, I wanted to talk about your perspective of whether you're bullish on cryptocurrency. And now I am kind of switching from as a payment system to which my personal feeling is that when it can become a payment system, legitimate payment system where you can pay your electric bill, buy that cup of coffee, and it's ubiquitous, that's when it reaches its full potential from a value perspective. But I guess I wanted to see how bullish you are with, we've got a tradition on the podcast of trying to end on a lighter note. We usually say, you've been such a great sport lending your time. And so I'm going to ask this question of you, and I'll ask it of Jeff, and then I'll give my answer. So The question to test your level of bullishness on crypto is the following question. At the time of the recording, so now, one Bitcoin is worth 44,704 US dollars. If I offered you either one Bitcoin or that US cash equivalent, uh, with one catch, you can't touch it for 10 years, which would you choose?
So I'm a firm believer in the diversified portfolio. Based on the information I have, I will definitely go with one Bitcoin right now.
Right. In other words, you're not going to base whether or not you go out for lunch in retirement on the value of that size of an investment. Good answer. I definitely am with you. In other words, you feel like based on that size of the investment, you're not worried about the risk, but you do see that it could you're not hedging either, or you're not putting your money down on either direction, that it could be zero or it could be who knows how much.
Exactly. No, I think if your question is that will you put all your retirement dollars, into the Bitcoin right now, the answer is no. All right. But if you say that, hey, can you put one Bitcoin and buy it? The answer is yes. And I didn't mean to, add a little bit color to my answer, but just, wanted to give a perspective. In my mind, as the 5Gs and 6Gs are coming up, more and more power is going to go on the edge, right? So the edge is here to stay when we are talking Web 3.0, right? So edge is here to stay. The AI is here to stay. The metaverse is here to stay. And the IoT is here to stay. So, what the fifth pillar of the Web 3.0 in my mind is going to be the decentralized angle, especially because of the edge. So, there is, as we talk about chip to cloud, I would say edge to cloud, right? I mean, it will be a better thing. Decentralized networks, the blockchains of the world, and potentially there are graphs that comes out of that, and decentralized financing is one of the use cases that will ride on this edge on metaverse, in my opinion. So that's why Bitcoin and Ethereum will be my currencies of choice right now. So I will definitely take one Bitcoin.
Jeff, how about you?
You know, I was thinking about this, and while Upendra was talking, I came up with my answer, and that's diversification. So here's what I'm going to do: give me the Bitcoin. Actually, no. Yeah, give me the Bitcoin. Well, it doesn't matter, I guess. Give me the Bitcoin, and I will convert part of it to Bitcoin or cash and split it up so that it's not all hedged in one thing. That's my answer. Let's just, for ease of sake, I'll say, give me the Bitcoin. I'm going to immediately sell it, buy half a Bitcoin, and then keep the rest in cash and put that somewhere else. What about you, Jim?
So wait, just so you guys know, you answered, you worked around answering the question. Just so you know, really what I wanted to know was whether or not you thought a Bitcoin was going to be worth more than
Well,
it's worth today.
We're market movers, right? We don't want to, have a tweet come out about this, and all of a sudden, um, Bitcoin prices are spiking because of the many thousands of millions of people who are listening to the show. So we don't want to be accused of, market manipulation or anything like that. So
Right, yeah, we potentially get canceled.
potentially.
Potentially. So I would take the Bitcoin. I mean, I think that you guys are right in that you need to have a certain level of diversification. I'm kind of getting old, so I've been, saving for retirement for a while, and one Bitcoin is not going to decide whether or not I can go out to lunch. But I think that, from what I'm seeing in the market, where some countries are actually considering making Bitcoin their actual national currency. um, I I just feel like the value of Bitcoin could just completely explode. And now that doesn't mean I'm recommending to anybody that they go all in on Bitcoin or anything like that. And I don't have a large holding of Bitcoin. I think it's one thing that I find, very suspicious about it is that it was not even 10 years ago, and it was, a couple of bucks or pennies for Bitcoin. And now it's, that's not a good indicator usually when you're talking about investments. However, I think that the likelihood is for it to continue to go up. That's my feeling.
All right. Well, I think that's a good spot that we can go ahead and leave it with crypto Jimmy giving his prognostication around the entire blockchain based universe, all that good stuff. That's probably, I think, you know what, Upendra, you've been great with your time. I don't want to take up any more of it because I know that you're a busy guy. I learned a lot from this conversation, specifically, kind of the evolution of kind of the space, some of the things that you consider on the fintech side. Normally we'll have kind of like a final thought. What's your quick final thought on the conversation we just had? What should people take away?
I think, first of all, I really appreciate you guys having me, and thank you for listening for so long. I think the digital identity, the reputation, and digital trust, there is a lot more evolution. Expect a lot more evolution. As we are hopping onto Web 3.0, we did not even get a chance to talk about how the identity will evolve in the Web 3.0 world. And I alluded to it that when we are talking about the DeFi and decentralized everything, can there be decentralized identity? And there are DIDs and those kinds of initiatives which we did not get. So a lot more to come. The purpose for me is to give back to the community, and then maybe inspire a few people to start some companies around this, and make the world a better place for all of us. And I'll be very happy to share my thoughts and give my 2 cents to these companies, whoever wants to reach out to me. But that is the whole intention of this podcast. So thank you for having me, Jeff and Jim. Really appreciate it.
Thanks so much, Upendra. And I will have a link to your profile on LinkedIn for folks who want to check that out. Jim, real quick, how do you want to wrap up?
Shameless self-promotion. We do our live stream on idac.live. We do once a week. Hopefully people can join that and subscribe and set up alerts so that they know when we're going live. They can join and submit questions or comments as we go. And also reach out by LinkedIn is the preferred method. I'd love to connect with anybody who's listening to our podcast, especially if you've made it this long.
Yeah, for sure. IDAC.live for the live stream, identityatthecenter.com for the website, IDAC podcast for Twitter, and definitely on LinkedIn, right? I think it's always great when we hear from folks who are listening. We get a lot of ideas for shows and episodes based on comments from folks, and it's always helpful for us. So I think with that, we're going to go ahead and wrap it up. Appreciate everyone listening, and we'll talk with you all in the next one. Thanks for listening to the Identity at the Center podcast. If you like what you heard, don't forget to subscribe and visit us on the web at identityatthecenter.com.